Hello friends, I'm going to start this video with one thing. Friends, I have seen that last one and a half years, or you can say last 2 years, if you see, there are many, you can say many people who are surrendering their life insurance policies. Let it be from any company. So I thought of an idea to share with you all to understand. And some people, I would say, make a very big blunders, mistakes. I came across one of the client friend who had surrendered his policies. This is 2025 we are in. Around January, February, he has surrendered all his policies after taking somebody's advice. I know that there are many people who have multiple advisors. So possibly he must be also having, other than me, some other advisor. And I have come across and seen that he had surrendered the policies. Friends, I'll be very frank with you. When a customer calls and he tells that he wants to surrender the policies, there are two things which we have to keep in mind, or I take care about it. One is that the client has already decided, or the person has already decided to surrender the policies. One, when this happens, I don't try to change them, frankly, because they already decided or they have come to some conclusion. Secondly, if they ask for an advice, then only I give the advice. Reason, because what happens is, if at all any advisor, according to me, it's a psychology. What happens is that whenever any person or advisor starts advising, the client might feel that the person wants to actually market market this policy, or you can say the client feels like he tries to convince, and not for the benefit of the client, but it is for the agent's benefit. That's what I feel. I have been giving training to lakhs of people and advisors. So I have seen and I have come across and interacted with many friends, and you will agree with me that whenever any person or advisor starts speaking about anything about the benefit of the client, it is a tendency that the person feels like he wants to sell something or he wants to convince something. And so this blunders, mistakes happen. So as I coming to the point, as I said about that, whenever any client comes and asks or says he wants to surrender the policy, I don't say anything. I say, just if you've decided, fine. If you need my advice, I can tell you. So once he or she says that no, they have come up to the mind that they want to surrender the policy, I don't try to normally convince or change their mind, because I want to keep a distance with the client, because with the respect between the client and the advisor should be there, because the client is an intelligent person. Every person is an intelligent person, an educated person, and possibly they have come to conclusion after taking that decision. Yeah, definitely show them what is their loss and all. So I came across with one of this client and who made a blunder, and he had incurred a loss of, should I tell this amount on the screen, on this video, or in this video, is around 1.55 crores. Friends, it's very sad that when I came to understand, but he had made up his mind in such a way that it was very difficult for me. Once or twice I tried, then I said, fine, whatever help you want for surrendering, I will help you. And this is how it happened. But uh, taking lessons from each and every case, I'm going to share with you this case study. Definitely, I'll not disclose the client's name, but there are this is our 27-28 years we are into this field of financial advising, and I have seen there are many case studies which can be, or which were lessons for me, as well as it could be a lessons, or those could be very good lessons for you all also. So I'm going to share. Most probably, I'll try to come up with the video and I'll try to explain to you. Okay, yes, these are the things what the person had done, and these are the things he should have done or she should have done, and what is the lesson from this video we will take. Okay, so without wasting time, as I said about, today I'm going to tell you, it's that why people surrender life insurance policies. So before I address in the next video, I'll tell you the case study, but in this video, first of all, this will be for all. Why people give up their life insurance policies is the topic, today's topic. So without wasting time, we will go with the topic and we'll see what can be done. So here, if you see, I have made a PPT, and possibly this could be helpful to you all. Yes, why people give up their life insurance policies. The real reasons behind the policy surrender. So, friends, this is our topic, which I want to uh, see that most of the people watch this video and just see if you have surrendered the policies anytime in your past, whether these were the reasons, or possibly if there was no reason or nobody to guide you, then uh, God bless you. But still, just see whoever comes across or with a mindset to surrender the policies, just ask yourself whether any of this reason because of which you're going to surrender the policy. So I have taken this the most $1 million question and the $1 million presentation, I would say, of the century. So people may be right, people may be wrong, but you should understand if anybody is surrendering the policy or you are surrendering the policies, whether this is the reason. Okay. So first reason, people feel that financial pressure. There is a financial pressure they feel. Normally, financial pressure means the need for cash. You can see after COVID or many ways, there are so many reasons that people come across and they try to surrender their policies. But one of the reason is the cash crunch or the financial pressure. Policyholders may need immediate money for emergencies, debts, medical bills, or other expenses, possibly. Just is this the reason for which you're going to surrender the policy or you're surrendering the policies? Just check. Or the surrendering the policy provides you this cash surrender value. Because of that, you're in financial crunch and so you're surrendering the policies. There are other reasons you can help yourself, I can tell you. But if this is the reason, always not necessary you have to surrender the policies, because I will show you how much loss you create and you incur. Okay. So yes, friends, thank you. So yes, friends, we have seen that people surrender the policies for different reasons. So here we go with the first reason. So according to you, you also tell me whether this was a reason for you. One is the first point which I feel people surrender the policies, it's because they have a financial pressure or they are in need of for cash. They need money. They are in shortage of funds because of certain reasons. It could be the policyholder may need immediate money for their emergency, for money if you see debts, medical bills, or any other expenses. Possibly that could be the reason. So surrendering the policies provide the cash. Yes, in a short time you can get the check, the cash surrender value in your hand. But before that, just see how much is the loss. Whether that loss is really particular. There are many other ways you can help yourself in your financial pressure. I'll come across with all these things in next future videos. Okay, how you can do that. The second point, if you see, you will agree with me, is that the policy people feel that main thing is premium becomes unaffordable. Whether this was a reason, sorry, this was a reason premium becomes unaffordable. The policyholder can no longer afford the rising or the regular premium paying, or you can say payments, especially common with ULIPs, endowments, or the whole life with high premiums. So people are there take in that instinct, they take that, yes, I will definitely save this much amount for next 20 years, 30 years, 25 years, or 10 years, 15 years. But you don't know the future. Sometimes you feel like you're in having a pressure to pay the premiums and it becomes unaffordable. So possibly just see that this was the reason for you. If you have surrendered the policies in your past, whether first reason financial trouble or second reason is becomes premium becomes unaffordable, is because of this you're trying to discontinue the policies, then you have to check yourself and see what needs to be done. Okay, there are other ways also to do, but whether your advisor or you have taken the advice properly from your advisor, so accordingly you can go. The third reason, if you see, is better investments or insurance option. The person finds a policy with lower premiums, possibly a person, because always what happens, you are surrounded with different people, set of people. You're not always surrounded with the one advisor only. Uh, if you see the HNIs, if you see high net worth individuals, they don't go with many advisors. They normally go with limited trusted advisors only. But normally what happens is it's insurance advisor's job normally to prospect each and every person. So what happens, you come across with different advisors also, and many good people, advisors, try to give advice to you. At least they tell, if you don't mind, don't buy anything from us, but we can review your policy and tell you what is the best for you. This is a normal dialogue which we do. I also do that because that is a normal reason and that is the right way also. But in that process, what happens is sometimes, if at all that person is very convincing, or if it's all that person is very sweet or intelligent, and if he's really good advice, then it's fine. But sometimes people fail into that trap. So just see the better investment options when any person advisors show you. The first answer will be, oh, what policy you're taking. This is what I have come across. See, because what happens is that person doesn't know. Possibly you have bought this policy. You can say you have bought this policy. You say 10 years back, or you can say 20 years back, or it is 5 years back. No, you know the position, what exactly, and the advisor, your trusted advisor who was. And now, suppose if you're changing the advisor, so that time what happens is it always happens that 5 years down before, your mindset, your age, many things are actually different. And now, if you see, it is different. So, first of all, whenever any person come across and you feel like you want to change, again go back to your advisor. This is my personal advice, and ask whatever your doubts, because without asking that person, nobody is a god, nobody will understand what is in your mind. So whatever you feel, you want to surrender the policy, you want to change the policy, or you want to close the policies, or you want to do anything with the policies, just take your one or two advices. Definitely you should take, and you take a final call and see pros and cons, and then go ahead, because you are yourself responsible for that purpose. So what is more important to understand is the better investment options, if at all you have. The possibility is the person finds a policy, same policy, possibly with lower premiums, but just see, you can compare apple with apple only, not apple with oranges can't be compared. So just see, it should be a similar product, because some features in this product, A product might be good, some products, something features in B policies would be good. But just see whether this is apple and this is apple. If at all this is apple and this is orange, then you have to just check in mind pros and cons here are also there, and in this policy also is. So just see whether you are taking a right decision. Possibly next time higher returns. Now higher returns means what returns? First of all, what returns you are expecting? What returns your whenever you bought this policy, whether that time the returns of the policies were different and now the returns are different. That may happen only in ULIP cases. That is a market related product. But normally in a saving products, it doesn't happen, because the bonuses are announced by the company. And once the company announces, that bonus is accumulated in your, normally if you see in your fund or the insurance fund. So what happens in your policy? So that you're going to get at the maturity. So higher returns means what? If at all you're changing the plan itself, then it's a different part. Like if you're comparing, example, I'll be very open about in this video. If you're comparing life insurance with say a market related product, it can't be matched, because there are some features, pros and cons here in life insurance of saving regular premium plans, and there are different also, if you see, the pros and cons in the market related, like SIPs, mutual funds, or you can say any other product. So you can't compare both the things. So just understand why the government or why the countries have come out with different products. So different products are for different reasons, that you should understand. If you have bought insurance, you should first buy insurance, or if you think about it, whenever you're thinking about buying insurance, or if you have bought the insurance, why you have bought this insurance, that is more important. Like example, if you have bought a TV, or if you have bought a computer, say if you have bought a refrigerator, every now and then you can't change, right? So what happens is you see what are the benefits, and then you know the price budget and many things, okay, the power consumptions and so many things. And then you come to a conclusion and decision like, yes, this product is good for me and I should buy this. And you know what things are not there in this. That also you should be knowing. So because everything, see, one person, it's like a person. In one person you will not get all the qualities or the skills and everything, skill set. So it depends, like what is more important. It's like, I would say, insurance is like a marriage, you can't change your wife every now and then. So same thing, your partner, not a wife, or you can say wife, any spouse, if your lady is there, then you will not be always changing your person spouse every now and then for short reasons. So just think, a regular saving plan of insurance is similar to your marriage. That's what I say, and I treat that way, and I always explain my clients in that way. So always, what is one thing very important to understand is, if you're looking for a higher returns, example, or something, or better features, or more suitable coverage, it is always there that when you buy this also, after 4 years, 3 years, 4 years, 5 years, you will get new features. You can upgrade your insurance programs. That's what I say. Okay, normally, if you see, suppose you have bought two insurances policies, say four people in a family and two insurances. Say example, you have eight policies in your family. Tomorrow you need something else and you find something, you can definitely upgrade, because that same policy or the same plan what you have purchased 5 years back, you have to upgrade the plan, because that time possibly, because of the reason like devaluation of the money, or you can say because of the inflation or the rate of returns coming down, you can say the interest rate which are coming down. So because of that also, what happens is you have to always see that you should be changing, or you can changing the plan is not the right way. You can upgrade your plans, you can upgrade your insurance profile. That's what you say. Same way like insurance portfolio we say, or investment portfolio. You know, always you should not change, you can say the schemes or something. You know, you can definitely see there are many people, they feel when they change they have done a right decision. It's like example I'll give you, always I give example, you know, like you're going for in a train, say I'm in say Mumbai, so that's why I will say VT station or Shivaji terminus, you can CST. Okay, from there if you try to catch a train, and if you want to go to say Pune, or you can say, I'm just saying a short distance, you know, still Dombivli, Kalyan, or something like that, some station. So what happens is when you start at 6 o'clock in the evening, example, and you are going home back, and you are staying at Dombivli, example, and if you're catching a train, now what happens? Suddenly you're caught a slow train, say example. So after that, what happens is you come to understand that, Arey, when you come to the other, there is a fast train which is coming from back. I'll go. So you get down, you go to the, you can change the platform and go to the other train. Till then you go there, you catch that train. Possibly that train you might miss one. Secondly, possibly 5-10 minutes difference is there. Some problem may happen for with that you can say train, and you catch that train. So I have seen many times people see, or this train I'll be changing, this platform I'll be changing, this thing. So schemes to change every now and then in mutual funds also, if you see in health insurance also, or you can say a life insurance, always to change a plan is a very big wrong decision. I would say wrong decision, friends, because you can upgrade your plan, but you should not come down with the plan. Sometimes it's okay, but not always. You can say, I would say 90% of the plans you should not change, because what you have bought, you also have bought with some time, money, energy, or given a thought process, and whatever is accumulated, that time which you have spent or invested. Say 5 years back, you have bought some insurance policy. 10 years back, you have bought some insurance policy, and now if you are surrendering, or now if you are discontinuing, or if you're changing the plan, you should understand your starting is today. 10 years, whatever was compounding has gone, because any money to get compounded, it takes 9.5 years. After 9.5 years, your money starts actually compounding. If you know the power of compounding graph, after 9.5 years, every 4 years, 5 years, if you see, your money doubles. But normally I see that people change the plan. What happens is they change the plan, or you can say they change the investments. In mutual funds, they invest 5 years down the line, they change the plan. Again, 5 years down the line, they change the plan. So it's the short term. We are not a traders. You should be a long term investors, and you can definitely benefit out of this. This is my personal. If you want to be a billionaire wealthy, just see. You can ask yourself, how is your knowledge about power of compounding? Secondly, suppose 10 investments you have done till date. How many investments you have changed in last 20 years, 30 years, 40 years? Just think, and according to that, I bet your investments will grow accordingly. Because if you are given a time for compounding, then it is good. But if at all there was no power of compounding in your investments, it is very sad. I'll give you one example is Warren Buffett. At the age of 60 also, he was having ample wealth, but it was not so much that he was, you can say, world's richest person. But from 60 onwards, if you see, he started his investment at the age of 14, 1/4. And then he has grown, and he had remained in the market, or you can say remain in the same trend, if you see, for a longer time. And so his money got compounded. Friends, without wasting time, I'll go with the next point. So, what is more important? I should, the person finds a policy with lower premiums, possibly because of that, people change. Higher returns, yes, that is also a possibly reason. Better features, higher returns means you will change the plan, or possibly you will go with the ULIP, normal plan. More or less, the benefits of all the insurance programs are more or less are the similar way. Better features, yes, possibly better features. As I said, you can upgrade your policy, you can upgrade your plan portfolio, and you can definitely add up, more suitable coverage, yes, possibly that also is one of the reason people go for new train which comes. They surrender the old policy to switch to a new one. As I said about same thing, people do that normally, and which is a common practice, as I said about. Then if you see, the next point is like policy no longer matches the financial goal. Do you think this is the reason? Policy no longer matches the financial goals. 10 years back, 5 years back, 15 years back, you bought one plan. And again, as I said, I have given the answer for this also in the last essay slide also. Life goals may change. Example, children's grown up, number of dependents. The policy may no longer align with the current needs like savings, retirement, or protection. As I said about, you don't need to close the plan. You could upgrade your plan. You can definitely think of upgrading your plan. So suppose you're part of 10 lakhs rupees, now more your income is increased. So you can, instead of closing that and starting a new, you can add up to your budget and add whatever is suitable, you can go. It's like a topping, on the cake, how you can design a cake and on that toppings you can put, and so you can make more that cake or any dish which is delicious. So same thing you can, your portfolio should be with many, if you see pie charts actually, and your portfolio, I'm saying about insurance and investment portfolio all together. So you can definitely plan. If you're doing a financial planning properly, you will normally not change the plan, because if you're not on the track, then only you will or absolutely change the plan. Reasons, because there is loss of job, there is a psychological depression which comes because of many reasons, health condition changes, because of that we change. It's possibly the surrounding, our, if you see the friend circle or the advisors who are there around us, possibly you come across with different programs and different people, and sometimes, I don't say all, but sometimes you may get misguided. So in that case, who will guide you? So that is your own knowledge will guide you, or your trusted friends will be for your help. So you should have a trusted advisor, and if you're trusting, you should trust it fully, not partially. So that's what I would say. So we'll go with the next reason. So this, as I said, about policy no longer matches the financial goals. So as I said, you don't have to change the plan, you can upgrade your plan. Next, if you see, is poor policy performance. Now, poor policy, as I said about in the last slides, return on traditional plan to ULIP plan, or ULIP plan may be lower than expected. As I said about return, regular saving plan, if you have, normally if you see, the saving plans will be giving you the similar return. There will not be a bad performance or something. Normally, I'm saying. But ULIP, yes, because of the market related product, it may change. The performance may change, and so you can change. But from a regular traditional plan to change to a different traditional plan, that is not advisable actually. As I said about you, whatever you accumulated till date, since how long you have been into that plan, so much accumulation of bonus must have been accumulated. That is total loss for you. So that you should take into consideration before surrendering. So poor policy performance, yeah, as I said about, you can stop and you can do many other things. Disappointment in bonuses, fund performances, or maturity value. So this also you see who, from where you have got this maturity value. Have you got? I have come across with one of the friend. What happened is they they had bought some policies from somewhere else, and they directly called, they used to receive a call like this, your maturity amount is around this much, and on that they came to a conclusion. They had just gone to somewhere at random, and somebody told them that this policy is going to give you this much return only on maturity. No, just see, do you, that person really understands about the insurance bonus workings, or how that policy is going to give, whether that person who had advised you is an expert, whether that policy, see, only the certification is not important, experience is more important. You should ask. I always give in my training programs, and for trainings for the clients also, I have designed a training program, a simple training program. You can say training would not be a, you can say the right word, but I can definitely tell you there is a program where nobody will actually fool you with, because I have seen many advisors and many calls, this calls come, unnecessary fraud call comes, and for that I have designed a small program for agents also, advisors across India. And I have designed a program which will be already, it's into the process, and you will get all the information on my YouTube channel. Yes, but that if you attend one, some are free lectures or free, you can say, presentations. You can just watch. If you find it interesting, then only you go, no compulsion. But if you, with a small amount, you can protect your funds. As I said about just one of the client which I told you who had surrendered, he had made a loss of 1 crore 55 lakhs. Now 1 crore 55 lakhs and couple of thousand rupees, if at all you would spend or you can invest, that can save your portfolio, and it's a family portfolio. And that person's age is 55 at present moment, friends. He can't go back and start a 20-year policy again. So that also you should see. I'll explain to you. I'll share the case study definitely with a dummy name. Absolutely. So coming back to, as I said, about what is more important to understand is the poor performance is you have to see who tells you and what exactly is the designation. Only big names and financial jargons. That person which I told you, he came across with the financial jargons. I always tell, see, I also know so many things about financial because I'm into this line. But I always tell my friends, clients, in a easy words, financial jargons are very difficult to understand sometimes, and they get confused or impress. I don't want to impress anyone. So what is more important to understand is heart to heart connection should be there, and what is reality. If at all this is 10 rupees, it should look 10 rupees only. I can't show you or impress you with 100 rupees and make this 10 into 100. So 10x, it's just a saying, but money, जैसे बोलते हैं ना कि पैसा से सोंग आणू शकत नहीं. So nobody can fool. I don't have a magic stick to tell you that this many returns. Okay, that person had told you this much 10 lakhs returns. I'll give you 25 lakhs returns in the same plan. Nobody can do this because that person or the product is not designed by the person. And there are many things I can show you in coming videos. I'll see, it's so much lot of information, technology in mutual funds. If at all I change something at the back end, you will see the performances differently. If I change the bonus rates, you will not know also. I can show in my presentation that person must have shown, a person must have shown, suppose 10 lakhs maturity. I can show you 15 lakhs maturity in the same plan, doing nothing. Just I'll do something in the bonus. So we should not do there. These malpractices are happening, and don't get into this trap. You should have a trusted advisor. That's only I can say. I'll go with the next point because this video is becoming long and long actually. So with that, I'll just see that key. Next point. Loan taken on the policy instead of continuing. Yes, sometimes what happens is you take loan, and some people prefer surrendering after taking a loan because the repayment becomes difficult. So this also, sometimes there are ways how you should be doing and from where you are taking loan. If you are taking loan from the policy itself, that is from the insurance company, then we have a way out. But if at all you are taken a loan from a bank, and if at all your mortgage that your policy is to the bank or financial institution, then it's difficult. Then the way out is very difficult actually. So I always suggest before mortgaging or before taking loan, how you should take loan. Again, all these are different topics, friends. So you can see mis-selling or lack of understanding. Yes, you must have come across mis-selling or lack of understanding. Many buyers discover later that the policy was not suitable. Benefits were miscommunicated. They bought it under the pressure. Oh no, what pressure? It could be possibly, I don't know, goody goody things or something. Sometimes it happens like, should I speak or not? I don't know. But yes, there is a kickback facility also people offer sometimes, which is against the law. But still, what people are there, like there are kickbacks on because of that they go. Then that time you should not expect what product you're buying actually, because you don't know how many things are there which can change the plan, and which can change, small things. You think that is a very simple thing. In India, at least, the insurance is still taken at a back seat. If you see, it is not on the front line. People, if you see, comparative to the Western countries, if you see, yes, they take it more seriously comparatively. Here also, people are taking it seriously. The awareness is increasing, so people are aware of it. Next generation, if you see, the young generation, they are very much interested in insurance. I have seen people come, the college students and the newly married couple comes to my office, and we had a lot of discussion. I get to learn something, different point of view from there, and we design a tailor-made plan from them. So it's very interesting. It's like Sanjeev Kapoor, the Sanjeev Kapoor is a chef. Now what happens? The ingredients are the same, but he come across, because he knows so many knacks and so many things. What happens is he can create some different variety of dishes. So same thing we also try to do with your needs. We make a tailor-made program. We create a tailor-made program, and small things are there. When you become an expert, or you can say when you're into the field more than 25 years, you get to know like what things to be done, what ingredients to add, and you can get that flavor, and what is your achievement with the needs and wants. So your needs are getting catered properly. So that's what we do. So many buyers discover later that the policy was not suitable. Yes, benefits were miscommunicated. They bought it under the pressure. So that surrender, once they realize this is mismatch. Now you tell me, after surrendering also you might come across and see, understand, whether I had made a mistake. Now that time, once you surrender the policies, you can't take back, because it's a loss. It's loss because you sign it is a, you can say, it's a legal document, contract. So contract breaks, you get your money back and finish, everything goes haywire. So next point, if you see, is need reduction in coverage. Sometimes when responsibility is reduced, example, loans repaid, kids independent, the high coverage may not be required. Yes. So this is a very good point which has come across. So we do, that's why I say whenever there is a need, as per the need, you should go with the policies. If you don't need the policies, don't take a policies. Insurance, don't take life insurance. So first and foremost, main question to ask each and every person who is listening this, watching this video is, if you have an insurance policy, just see, take on paper, just staple it on the insurance policy and write over there why you have bought this insurance. So whenever you're making a payment for that policy, particular policy or the insurance plan, you should know, yes, this, when I'm paying this 1 lakh rupees, this is going to get me a retirement program of 1 lakh rupees or 2 lakh rupees per month throughout my life, or say a 1 crore or a 5 crore or a 10 crore corpus for my retirement. Or this I'm signing, say, 2 lakhs rupees check or 50,000 check. Yes, I know my child is going to get secure, and in case anything happens, my child will not suffer anything from education point of view. I am there, I am not there. Education money of 50 lakhs for her, the world class best education my son or daughter will get. Do you really know whenever you make the payment? I see 99.5% of the people don't know whenever they sign check or whenever they are making payment, what is going to get in return. You will not, because main thing is you have not done annual review also. Annual review is one of the practices which every advisor does, and every you can say the ideal customer, I would say, takes an initiative. I have, I can tell you, I can share with you, I can do 600 meetings in a year, 50 to 80 meetings in a month. I normally organize with those are annual review meetings, which I do with my clients. And many clients, you can say 50% of my clients, they have booked their slots in which month they want to have annual review meeting. Some say I want to have in August, some say whenever there is a birthday, their birthday, they take that month, and they tell, in this month we will be taking a meeting, we will do an annual review, and then we decide the date in that month also, 1 month prior, that yes, this date, and so we block. So this is how we can, and because of that, they have saved n number of, you can say, money wise also, because there is so many change. There are so many changes in the plans. See, whenever you do annual review, why you should do? Because there will be change in income. Whatever was 5 years back, today it may not be the same. It might be reduced. It might be hiked, whichever way, because of inflation. Something what you have planned earlier 5 years back, 10 years back, might be now that is not sufficient. As I said, about that time, you must have bought about 50 lakhs policy example, or 10 lakhs policy. Now possibly that 50 lakhs which you're going to get might be on a lesser say. So whenever you do review, you come to know there might be some change in your health, and because of that you think, yes, I feel something odd, and before the insurance companies deny giving you insurance, you try to buy insurance. I have seen many people, after they come across with any major illness, they run after our office also, or to the insurance company, and say, I'm ready to pay the premium price, but give me insurance. I have seen, but they don't get insurance. So the value of insurance, who will have, the person who has come across a major any disease or a surgery or a critical illness, and that time suppose they don't have insurance, you can ask them what is the importance of insurance. They will say, oh, I made a mistake, I should have bought this insurance, and that time the cost was also less. So you can say about health insurance also it happens, and this happens with the life insurance also. So friends, which is very important to understand, is my point is, no reduction of need, reduction in coverage. So plan accordingly. Suppose example, one liability is for 10 years, don't buy that liability insurance for 20 years or 25 years, a bigger one. If you have bought that, buy different needs are there, for different needs, that much security you can take. We do that. It is called a tailor-made programs. We don't buy at random, this chalo, give me 5 crores insurance, and no, we say why we want, really you really need it or not. So we do that, you can say, question answer session before we go across with any clients. So I'm just opening up now, because what is happening is, previously we used to send so many messages, and but people are so busy, you can say, clients, friends, everybody, so they don't have time. So I have come across with this interaction, my channel, YouTube channel, and where I will be openly speaking, and possibly nowadays is a trend that people watch. I watch so many videos, which are informative, and with one video I can reach 2 lakhs of people at least. So that's what is my intention, and might be this video would help. Please watch this video till end. It's a little bit longer video, I can understand, but I'll try to make it short also later on. Yes. So the next point, if you see, it's switching from traditional ULIP plan to term insurance. Yes, people are there. This is a fashion, you can say, presently, or the with due respects to all CFPs and all qualified young people, or you can say the trained. They say buy a bigger term insurance and buy you can say SIP. That's best. No need of saving plans. Friends, just understand when the insurance company started, there is a calculation, Some things you can go with the permanent insurance, which is a saving regular plan. Some things you can go only with the traditional plan. Some things you can go with only the child plan. Some things you can go only with the term insurance. Term insurance was not the concept of India. It has come from the Western culture, and I will give you how the birth of term insurance came. We believe, see, the psychology and the thinking is definitely the Western culture, or the psychology is pouring here in India also. But you have to understand what exactly. I have seen out of 100, you can say term insurances, 50% of the term insurances get closed. Do you know? Do you know that? How many term insurances, bigger insurances, with due respect, I'll not name, but the claim settlement happens? Do you have figures in that? You should know about it. So, whenever you buy term insurance, you should know which term insurance you should buy, what term insurance you should buy, how you should buy, and from where you should buy. So, you should know for what reason you're buying the term insurance, or what reason you're buying the regular. I will not say always go with the regular insurance. No, it is not. People always feel, I'll tell you also, there is a misconception that you can see in, you can read also in articles, with bigger names, I can say, bigger names of you can say, I should not name it, but what is more important is you will see that they write, big authors, they are all paid. Do you know? You should ask them. I will not name anything, but I have come across the big CEOs, fund managers. I will not name them. They say something, but they have for themselves, they buy what they buy and from where they buy, from whom they buy. You should know. Ask them and check their policies first. You will understand. Everything can't be put on the video, because there are always some restrictions, and people might take it in a different way. So you should ask people who are saying ki buy equity. You should ask them how much equity they have bought. You will understand. If they are saying ki buy term insurance, why you should see why they have bought the saving plans. So it is always the concept. Term insurance is for poor people. That's what is the concept. Means HNIs, if you see, a high net worth individual don't buy term insurance. They buy saving plans because they have the capacity also. Yes, term insurance is bought for what reason, and how the birth of term insurance. As I said a few time back, 2 minutes back, I will create a video, and you just watch that, and you will understand why term insurance is not fully operating, or you can say it's not fully acceptable everywhere. People don't like always, but yes, the new fashion is buy term insurance and buy SIPs. So commitment, nobody wants to give a commitment, so that time they go with the term insurance. Anyhow, I'll not go into that, but I'll explain to you the next point. Dissatisfaction with the insurance company. Yes, this can be a possible. If your poor customer service, claim settlement concerns, trust issues, then definitely you should see. But from which company? You should see the company, and who is telling you about the company, who is telling you, sharing you. You can go on IRDA site and find out all the details. If at all you don't understand, because so many facts and figures are there. So if at all you don't have, then you should have a good trusted advisor who can explain to you the slides and the advice. He should or she should advise you, or you should go to them properly. This is very important. And what is more important to understand is, yes, tax planning changes. The policy may no longer offer desired tax benefits due to changes in tax rules or personal income situation. This happens, but this is not for all. It happens with keyman insurance, or it could be for some other reasons, possibly. There are many ways. Like example, I'll just give one example and close this video. Like just now, you have seen health insurance recently, from 1st October onwards. If you see 22nd of September, October, the government of India had closed the GST on health insurance and accidental insurance, and also this insurance, also life insurance. So what has happened now? Because of that, there are group insurance policies also. Do you know group insurance policies which company had bought for people, their employees? Many have a second thought whether they should continue with that. Say example, 1 crore premium you are paying today, and 1 crore premium, suppose the individual was paying. So for individual, 1 crore premium was paid, 18% was a GST. So it is 1 crore 18 lakhs. Okay, this is understood? Yes. And this is paid by individual. Now say that is gone. So every person is free from the GST. Okay. So this is one which is a very good news for each and every person. Secondly, what is the second scenario? Suppose you are a company and you have 100 employees and you're paying 1 crore premium. Now, for them, for you, you got that individual policy which is there, like 18% is gone. But here, if you are having a company policy, that is the insurance, group insurance, there the 18% tax is not gone. So people have thought now that I'm talking about the short, medium enterprises. That's what I'm saying. SMEs, they are thinking, I have come across, they are thinking what to do. 1 crore instead of paying this, because they wanted to give this as a facility, you can say, or you can say to retain the employees, a value added service. So what they are thinking, they can increase the salary and they will close this mediclaim company. And they will see that they all pay the insurance premium through individual basis. So how this is how it should work, or how it should be working, it is on personal basis, company to company and the employee to company, how it is happening. But you are understanding. So suppose 100 insurance companies have bought, say 100 companies have bought group insurances, at least 40% of them are thinking to close down and giving that salary hike or something to the individual, and see that they pay from their pocket and they get totally tax benefit. Because 1 crore, if a company is paying 18%, means nearly about 18 lakhs, they are paying simply as a tax, GST, which they can avoid. 1 crore to be distributed as a salary also to individuals, as a, you can say, in salary hike or something, some way or the other. It's a, these are perks, you can say, right? So, friends, what is more understanding to more to understand is this kind of tax changes possibly is there. So, thank you. Why people give up their insurances, life insurances, the real reasons behind policy surrender you saw just now. Now, I will just tell you also what are the main things again, and I'll just brush up what can be done. So, let's see about it. Let's go with the back slides, all the slides, and I'll show you all this to be covered. We have covered. Yes, this was our first slide. The first, financial crunch, because of that people surrender. The second, if you see, premium becomes unaffordable. Third is better investment insurance options. Third is, if you see, fourth, policy no longer matches the financial goals. Poor policy performances. A loan taken on policy instead of continuing. Mis-selling or lack of understanding. You can see the need reduction. If you see need reductions, and what is more necessary to understand, need reduction in coverage. Switching from a traditional plan to ULIP plan to term insurance. Dissatisfaction with the insurance company. This can be again here not with the insurance company, it can be with the advisor also. But why to make your loss? You can continue with the policy because customer care is there with the company. So it's up to you. Tax planning changes also. Yes. So these were the points, friends, and I think you must have enjoyed this listening also and watching this video. Thanks for watching this video till the end. Do like, subscribe, and I will come across with the connecting videos with this. Now, the next video you can watch here, you can say, or say here. Actually, this is the best way to show you this video. If you watch, you will know like how that person has incurred a loss of 1.55 crores. 1.55 crores, madam. It's very big amount. And because he surrendered the policies, I don't know whose advice. May God bless you and take care of yourself. Do contact your financial advisors, insurance advisors, health advisor before. So make God bless you. Thank you so much. Bye. I will close the video here only. Thank you.